Welcome to Smart Stock Watch. Today is September 9th, 2025, and we're diving into AeroVironment's fiscal 2026 first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. AeroVironment has certainly made headlines with their latest earnings report, and I'm excited to discuss the details.
Revenue and profitability overview. Let's start with the top line. AeroVironment reported a record first quarter revenue of $454.7 million, a 140% increase year over year. John, what drove this significant growth?
The acquisition of BlueHalo was a major contributor, adding $235.2 million to the revenue. Legacy revenue also grew by 16% year over year, showing strong performance across their existing operations.
Despite the revenue growth, the company reported a net loss of $67.4 million. What factors contributed to this?
The net loss was primarily due to increased expenses, including $79.7 million in intangible amortization and other non-cash purchase accounting expenses related to the BlueHalo acquisition. Additionally, there was a significant rise in SG&A and R&D expenses.
Operational efficiencies and future outlook. Moving on to operational aspects, AeroVironment reported a record backlog of $1.1 billion. How does this position them for the future?
The strong backlog, along with $399 million in bookings, provides excellent visibility into future revenue. They have 82% visibility to the midpoint of their fiscal year 2026 revenue guidance, which is between $1.9 billion and $2.0 billion.
What are the key growth drivers for AeroVironment moving forward?
Their diversified portfolio across air, land, sea, space, and cyber, combined with their ability to scale manufacturing, positions them well to capture growing demand. The acquisition of BlueHalo enhances their capabilities in high-priority areas for defense.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. AeroVironment reported an adjusted EPS of 32 cents, slightly below the forecast of 34 cents from 5 analysts. What are your thoughts on this?
While they missed the EPS forecast by Saud 0.02 cents, the overall financial performance was strong, especially considering the significant revenue growth. The miss can be attributed to the higher-than-expected expenses related to the BlueHalo acquisition.
Do you think this EPS miss will impact investor sentiment?
It might cause some short-term concern, but the long-term growth prospects and strategic positioning should reassure investors. The market often looks beyond short-term fluctuations when the underlying business fundamentals are strong.
Key takeaways. In summary, AeroVironment has delivered a record-breaking revenue performance in Q1 2026, driven by the strategic acquisition of BlueHalo. Despite a net loss, the company's strong backlog and future revenue visibility position it well for continued growth. John, any final thoughts?
AeroVironment's ability to integrate acquisitions and expand its capabilities is impressive. While there are challenges, the company's strategic initiatives and market positioning offer promising growth opportunities.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on AeroVironment's performance in the comments below. Until next time.